Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. It is no, that's not okay. That's a dope remix, but that is not what we wanted to be hearing on the music here because that will get us taken down. There we go. So it is Friday. We've got non-farms. Does anybody care what the non-farms number is anymore? I guess we'll see. Probably if this number is above the consensus, we will probably see a pretty steep market sell-off still. So let's go into the charts and see where we're at. There was a little bit of movement overnight from what I can see. Well, here on the treasuries, you can see that we are back up towards the higher end of this past 3-day range. By the way, I bought up this. I was able to hold it up for the next little swing up and was able to take quite a nice profit on it. So I'm really, really happy with that trade yesterday. And by the way, it very much felt like old times there. We're putting 5,000 contracts up, and at the close on the both the pit close and the S&P 500 close, some of the largest amount of volume I have ever seen. It was absolutely crazy. Now, S&P 500 took a little bit of a dive yesterday. Actually did end up on the lows. We're kind of recovering on the overnight session. Here we got oil heading up. Some rumors that Russia has agreed to more output cuts, apparently. Gold and silver kind of rising here with the interest rates a little bit more volatile than the rates. Copper doing really well overnight here, and the trend is starting to look not so bad over in copper. Then we come over to Bitcoin taking another dive. I think the reason they took this other dive was because of reports that the other ETFs that were pending are going to get denied too. But I'm not 100% sure, but like this spike up, Barded completely gave up. So you can continue to see this stuff where it's like you get these big moves, but it's like one guy and then he has to give up his gains and makes nothing, if not loses money. Then we got the dollar. Well, they're not back above 104, but they're doing a little bit better than they did yesterday. So, but the dollar overall this week, despite being at such high levels, have been mostly bearish. So that's kind of where we're at there. All right, so now let's come back and talk about the news. So the U.S. non-farms payroll consensus estimate is 170. By the way, Goldman, who is normally pretty bullish relative to everybody else, and I tell you what, they don't always get it right, and their track record on this is pretty spotty. But when they do hit it, it's like, oh my gosh, how'd you do that? And their estimate is actually quite a bit lower than the consensus. Now, anything lower than consensus is probably considered good in the S&P 500. But if we get something above 170, all of a sudden, the market has to start thinking about interest rate hikes again. They do not want to do that. The market would be very upset if we got a number over 170. So now, if it's kind of in line, I don't know. You're always going to see a lot of volatility around non-farms, but I'm really kind of feel like that the market is starting to be like, we don't believe you. Like they're starting to ignore this number. So at least they don't give it as much heat as they used to, and a lot of the action that we see here is just like traders trading and has nothing to do with fundamentals. So keep that in mind. I'm not going to be putting my account on the line for this one here. To give it like 5-10 minutes, work itself out, then maybe if we see a trade, we might do something. But Especially, by the way, going into a weekend, 3-day weekend. You got long? Well, probably got an okay price. But it sounds dangerous to me. Sounds crazy. Okay, well, I mean, you got good room for the stop. Here we go. Choked on water there. All right, here we go. Ooh, my boy. My boy. Oh, God, I hope you did not stop on that. Because that was good. 187 versus 170. Higher than expected. I don't know about that. Oh, wow. Okay. Wow. Okay, this is interesting. Oh my gosh, Bond, I'm so sorry. What happened. Dude, that is so fucking lame because it was, you know, it's going your way. Yeah, the unemployment rate, okay. Do you see what's going on here, Bureau of Labor Statistics? They're not buying your bullshit anymore. Non-farm payrolls, expectation 170, actual 187. Nobody believes it. Bonds buy, equities buy, because again, I said if it was higher than expected, then you would probably see this market sell off as they start to think that maybe the Federal Reserve would start to increase rates again, or at least at the next meeting. But the U.S. unemployment rate was 3.8 versus an expected 3.5. That is a huge deviation from the expectation, and so that's why they bought. They ignored the headline number completely because it is bullshit, and they went with the household survey, 3.8%. What an outcome. Jeez. I can't even, like, this is gonna have waves in the financial industry. I mean, like, I don't know how this is gonna turn out in the markets overall, but people are gonna definitely be talking now. Like, they were already talking with all the data coming out this week that, like, the numbers are fudged, that they get revised down every time, etc., etc. And I mean, honestly, like it's 187 and they revise this down next two reports. They're gonna revise, you know, it's gonna be like 150 by the end of it. So, like, people are gonna be talking now about how they think that this number is being BS'd. Wow, Apex is doing 80% off. Are you kidding me? I guess for Labor Day. Need to reset this. Well, the dollar is getting crushed. It's not too bad yet, but you know, I could see them definitely going to 103 even, potentially. S&P 500 took a good 15-point jump. They've given up about half of that so far. The treasuries, on the other hand, have not retraced so much. Treasuries are staying up there. and I think with good reason. I do not believe that with unemployment ticking up there, 0.3%, in this past month that the Federal Reserve is going to be like, oh yeah, we really, really need another 25 basis point increase. The strategy of dropping good headline numbers and revising them down later is only going to work for so long. So here's the thing. I don't have any direct evidence that the Biden administration is intentionally trying to fudge the numbers, etc., etc., etc. You could have many different alternative explanations for why this is happening. For instance, some sort of discrepancy in the way that they're calculating the numbers, that, you know, because of the pandemic, there's something about the way they calculate the numbers that is kind of screwing with the initial estimates and all of that. But here's the thing. It's been like this since pretty much almost every payroll report that we've had since the Biden administration has been in got revised down lower. And you don't sit back and say like, well, maybe there's something wrong here. Maybe we should change our methodology or adjust things because we're getting it, you know, it's getting revised down so much every time. And they don't do that. And that to me is pretty strong evidence that this number is being goal-seeked by the administration to make the hot top line numbers look good. Because there's no way that this would be continuing otherwise, right? Now, I'm sure that there's like something in their it has something to do with the I don't think that they're just making the number up, right? Like they're doing the methodology, but they clearly have it set up in a way to try and make the administration look good, because otherwise they would change it. and there's just no way that you can explain that big of a difference between the household and the establishment surveys. And that's the other big one, is that non-farm payrolls was about 17,000 better than expected, but the unemployment rate was 0.3% worse than expected. That is, these are going opposite. That is an insane divergence for that report. I don't know if I've ever seen that. Like I've definitely can recall some surveys where it was like non-farm payrolls were in line, but unemployment went up a little bit. But not one where they like just went in complete opposite directions. Maybe that happened once before, but man, it is unusual. And also, usually when the unemployment rate changes, it's like the unemployment rate was like 0.1% different from what was expected, and I've seen reactions off of that. For it to be 0.3% different, that is a big difference. That is a big difference. Fed has to do things to slow the economy for the politicians would, or otherwise the politicians would lose. Well, you know, the one kind of like hope in all of this is that the public at large has not been buying it at all the entire time. I've never once seen. I mean, there are people in the media, I suppose. There are people in the media. They're like, oh, see, Bidenomics is so good. Look, it's all so good. But nobody in the public believes this. Okay, let's go check and see if we've got some stories out here so we can read into some of these numbers. Because there was almost certainly some of the past numbers revised. Okay, no, I don't got anything on there yet. Let me come over here into Twitter and see if I can see what the revisions were on Twitter. Because there was almost certainly... Okay, well, here's Nick Timmerow's private sector payroll growth is slowing, and the unemployment rate rose to 3.8% in August. The U.S. economy added 187 jobs. Payroll growth for June and July was revised down. Okay. Don't see how much, but they were revised down. Let's look at, there's a bunch of other numbers, by the way. Manufacturing payrolls, they were expecting 0 and they got 16K. And so that manufacturing alone can explain the whole difference. I don't know. But US average earnings month over month went down to spot 2. Now, in case you thought that this was just the end of it, now it's time for the weekend. We got those PMI numbers at 10 o'clock Eastern time, so don't go anywhere. Treasury's kind of doing its thing, and it looking like they're gonna distribute up and through here, and that we've kind of formed the liquidity hole. Good moral. Well, the public that's into markets and finance, the average Republican doesn't buy it for their own biased reasons, but the default Democrat buys it hook, line, and sinker. Nah, I'm not sure I agree, Uzi. Just because I do not see the average Democrat out there being enthusiastic about the economy. Maybe it's just because most of the impressions, I guess, that I'm getting from Democrats on that issue are coming from people on TikTok, and the Chinese will never let you see anything positive about capitalism or the United States. But most of these people are very, very negative about the economy, particularly the high cost of housing. I tell you what, man, it is, geez. I mean, don't get me wrong. The cost of housing right now is super high and it is super ridiculous. But the way that these Gen Z kids that are just coming into the workforce whine about things just drives me effing crazy. Like, you think it was easy for me to get into a house? No way, dude. I remember when I was in school, I was in the computer lab till 12 o'clock because that was when you had to submit the assignments. I was in there till 12 o'clock almost every night. And it wasn't because I was slacking and like leaving the assignments till the last day. It was because I could work on my work with all the free time that I had. And they were just giving us so much free work that at least one of those things would end up at the end and having to be turned in late into the night. And then after I was finished, I would turn around and help other people so that in the future, when I needed help, there would be like a framework and people around to help me. And I'm glad I did it because I needed a lot of help too. It was not easy. And then when I did get into the workforce, I hardly spent any money. I lived in the smallest apartment that I could for several years. It saved up as much as I could so that I could put down a down payment on a house as early as I could. Because I can remember going back as far as 2010, them talking about, well, they're not, all of a sudden after the financial crisis, they're not buying as many, or they're not building as many houses, and millennials are going to have a problem getting into a house. And I said, I need to get ahead of that. So I sacrificed. And then when I did buy a house, it was a very large portion of my income. When I bought this house, at first, it was like 50% of my like monthly take-home pay. And, excluding the tax, everything that takes out, it was like 50%. One paycheck just entirely went into the house. But that was the only way that I could do it. And I knew that eventually that my pay would go up and that I would be able to. If you want to get into a house, kids, if you're like Gen Z, you want to be in a house, it's going to require sacrifices. It just is. And there's no point in going online and whining about it. You think the politicians are going to fix it? Come on. Look at the way that things are going. The politicians are still just, lying through their teeth, trying to save themselves. Oh my gosh, which reminds me. So as I was eating breakfast, I was kind of scrolling through TikTok, and somebody had reposted this video that Vivek had posted somewhere. I don't know where he put it, and he was like, oh, all of the knives are coming out for me, and here's the things they're saying that aren't true. And so then he immediately goes into the whole thing about how he made money off of that pharmaceutical drug. And he lied about everything about it. He's like, well, here's the truth. I developed this drug. Okay, no, you didn't. You bought the drug off of somebody else for $5 million. Okay. And by the way, you knew when you bought it that it had already failed. You already knew that it was a drug that didn't work according to their clinical trials. And then you shifted around all of the data to make it look good. And then you sold it. And then he says that he didn't make money off of it, but he did because he put it into his subsidiary and he still owns the money from the subsidiary. And that was not harmed so much from the stock price of the full stock going on. If he had stayed in the stock, not done the deal, he would have lost everything with everybody else, but he didn't. He just straight up lied about it. Oh, it makes me so mad. I tell you what, nothing will make me turn on a politician harder than when they just straight up lie to me. I remember there was this guy here at local Salt Lake. He's like, oh, we want to do our city wanted to incorporate because we were in unincorporated parts of Salt Lake. And he wanted to have this meeting with us to try and, get our support and everything. And he said, yeah, we fully support your city's right to choose. And you guys are doing good work and all of this. And we're all very skeptical, because we're all Republicans and he's a Democrat, but we're all skeptical of him. So we didn't support him. First thing he does when he gets into office is he puts forth this proposal that would basically freeze everything so that the unincorporated areas would be forced to remain unincorporated forever and they wouldn't have the opportunity to become cities anymore. First thing he did, he straight up lied to my face. It wasn't just like he said, I asked him the question, he looked me in the eye, he said what he said, and it was a lie. And it was the first thing that he did was the exact opposite, which means that he knew it was a lie when he told me. And that's what Vivek is doing. It makes me mad when a politician does that. I totally get where it's like, people's positions shift over time. There's the pie in the sky policy proposals, and then there's like what actually happens. But that is just a politician straight up lying to me. Will not put up with that. Yeah, Trump up by 4 polls in the latest poll today. This is interesting, but the question on that one would be at whose expense? Yeah, I'm talking about Vivek. At whose expense? It seems to me that Vivek has been losing some support, but I haven't actually seen. You know what? Let's go to Real Clear Politics and see if we got see if they've got this stuff to for us to see. Okay, we've got a decent number of polls that seem to have happened since the debate. Now, yeah, it looks like DeSantis is still losing. Ramaswamy has kind of topped off. So if let's see here. I thought that there was a way to turn some of them off so that I can see here. It looks like Haley, it has increased. Oh yeah, from 3.6 up to 5. Curious that Pence has got that big dip. You can't really see it. Oh wait, can we do it like the last 30 days? Zooming in like that doesn't really help. You really need to take Trump out of it. But you can see Pence dropping is the one that dropped the most. That's very curious to me, because I thought he did a good job, at least on the biggest issue dogging him, that he didn't go along with Trump wanting him to decertify the election. I thought he gave a good defense, but apparently the public don't see it that way. But DeSantis is losing. Now, I think you might see a shift, though, because the thing that I'm seeing right now is, and I wouldn't call it the establishment, because these are not establishment people that I'm seeing saying this sort of stuff, but they are like the commentariat. You know what I mean? Like the political commentators on Twitter and online and all of that stuff, right? And they are really high on DeSantis. So more so than they were a few weeks ago, because let me move my microphone here a little bit, because they feel that he has done a very good job with the hurricane. It doesn't help that he can't stop grinning. Well, I don't feel as genuine. I feel like everything about him is fake. Like the honest truth is that with Vivek is a special situation for me, because he hits all of the things that I just despise. Because the thing that he did was particularly to do with the markets and like a pump and dump scheme, right? And then I feel that he's lying about things, and that he makes high and mighty promises and tells the far right everything that they want to hear, and not really like being realistic about anything. You know, he kind of pushes my buttons in a way that I just really, I am not rational about him anymore. Like I don't think that I can put in like in terms of like what are his chances and everything. I don't think that he really stands a chance of becoming president, but my analysis on it may be too colored by just how much I hate him personally now. It didn't feel that way at the debate. At the debate, I was kind of like, okay, let's see what this guy is. Let's see how he does after the debate. And then I did all of the research, and now I despise him. Yeah, zero chance. The other thing was yesterday, Donald Trump did make a comment about him, and he said, well, he likes me. He says that I was the greatest president ever. Anybody that says that, I'm going to like. So he kind of played the politician route with it. Because I do kind of wonder if there would be how the interaction would go if Donald Trump and Vivek were pitted against each other on an issue where Vivek is more extreme. Because the thing that's weird about all of this is that in this primary, Donald Trump has been running to the left of Ron DeSantis and attacking Ron DeSantis from the left. And meanwhile, Vivek, who is like the Trump stalking horse, is further right than all of them. So like it's all kind of weird. But the reason that is because Donald Trump is just attacking with whatever he thinks is his most effective weapon. Is really what it comes down to. So he's totally willing to like play fast and loose with ideology and everything and attack somebody from the left is what it is. In fact, when I look at it and I look at how aggressively the Trump campaign, because they've been like attacking Ron DeSantis on the hurricane thing like crazy. And I think in a way that is kind of almost like a little disappointing to me that they would be like that during a crisis, you know? They must be really afraid of him. But we'll see. I think that right now you're getting this thing where like I hate how people change their opinions based on what they think everybody else thinks. Like if everybody thinks that Ron DeSantis is a loser, then they don't care, you know? And what I see with Ron DeSantis is a guy that seems to get things done, but has zero stage presence. If you were ever going to get a guy in office like that, though, it would be this election, you know? because Joe Biden's such a terrible candidate. Okay, so to the markets. Treasuries have retraced that move and have come back to briefly touched the price that we were at before the news. Before the news. He meaning Ron? I think that at the debate, Ron DeSantis looked very practiced to me. He's got, I don't remember the name of the guy, but there are certain like debate coaches and so forth that really know how to play the debate. And you can kind of tell when the candidate has that and when they don't. So Ron DeSantis had a applause line for his first sentence, everything that he said. He was really, and I think that his stage presence is terrible, but he's able to talk. Like, he's able to go in, say what he needs to say it well, get through the whole thing without stumbling. Nobody really knocked him off of his game, although they weren't trying. He got to play the game the way that he wanted to play it, and he had done it very well. And I think that it shows a great deal of practice and preparation on his part compared to some of these other guys where when they get challenged they kind of like start to stutter and it gets rough, or like Chris Christie, who I honestly think Chris Christie is probably just winging it because, he's often like the debate practice for other people. Like, I think that he was the debate practice for Mitt Romney. But then when like some of his top moments came along, I felt like it kind of fell flat. So, yeah, I think that the Ron DeSantis is like super, super practiced. But the issue is that Ron DeSantis's fake smile is terrible. You say the thing and then you need to smile at the end, and it's just kind of like, it's just the worst smile. It's like worse than Mark Zuckerberg, Oh my gosh. It's so bad. And I saw it during the debate. I saw some memes about it. Yeah, his stage presence is terrible. Like, no way. If it was like anybody other than Joe Biden, I think he would probably lose just based off of that alone, which kind of sucks that that's like what people look for, but that's the way people are. They get this whole thing online about like there's the alpha male, sigma male kind of nonsense, which is like, well, okay, humans are not dogs. Apparently dogs aren't dogs either. That the research that all that was based off of was like an incorrect understanding of what's going on. But people aren't dogs anyways. But I think in many respects, like, people are worse than dogs. People are worse than dogs. Like, some of the things that people will latch onto when we're talking about like tribal politics are like really stupid. And there are certain groups of people that are very, very easy to manipulate. You just have to be as narcissistic and psychopathic as possible. And that's all there is to it. Is just be brazenly self-confident. Okay, something I have observed is that both non-farm payroll and unemployment rate got to come out good to make the dollar go up, because if non-farm payrolls comes good but unemployment comes bad, it always makes the dollar go down. Well, so I think that they kind of look at both of them and make their decision, because in this particular instance, unemployment was bad, and they went almost completely off of the unemployment. Let's say the household survey number. There's the household survey and there's the establishment survey, right? And I think that what is happening here is the market is saying, we don't believe the establishment survey anymore. And they're going completely off of the household survey. I mean, there was some people that sold it. There was some people that clearly had their robot set up to be anything over the headline estimate of 170, and we sell because they came in and they stopped out one of our friends here. But then they bought it up because of the household survey. I really cannot wait to see the commentary on this. You think Zero Hedge has their story up now? Let's check. It's been 30 minutes. Surely that's enough time for you to write a story, Zero Hedge. Okay. Instead, the top story that is pinned right now on Zero Hedge is a several-day-old story about a female rapper having a wardrobe malfunction at a Saudi concert, and then they shut the concert down and are charging her with prostitution and blasphemy. But we haven't gotten a story about the non-farms. Come on. Oh, there we go. Now I refresh. I get it. Okay. They're like, oh, it's not there yet. We need to put it up because Seth is talking about it. I'm starting to wonder sometimes that maybe Zero Hedge is one of my viewers. If that's true, then I would hope that he unblocks me from Twitter because sometimes I miss good stuff. Okay, let's read. Ahead of today's payroll report, consensus was already ugly enough, with some of the largest banks expecting a number well below expectations. JP Morgan was at 125, Citi was at 130, and Goldman was at 149 versus the median consensus of 170. And while moments ago we got a number that was at least nominally stronger than expected, the report in general was weak enough to suggest that, as we expected, the wheels are finally coming off of the U.S. labor market. With that preamble out of the way, moments ago, Biden's BLS, aka the Bureau of Lies and Statistics, reported that in August, the U.S. added 187K jobs and beating the consensus estimate. Superficially, this would have meant an unchanged print from last month when the BLS also reported 187K. However, in keeping with recent trends, that number was revised, drum roll, lower again to 157. Whoa, really? Whoa, wait. Okay, so we didn't quite get those numbers on Twitter. I was kind of looking around for it. They revised the previous month's number lower from 187 to 157, so they literally revised it down 30,000 jobs? Woo! I am really like... I really want it to be like, I don't want to go into conspiracy theory territory. I don't want to be like, YouTube and TikTok and everybody being like, you're spreading disinformation. But this is bullshit, man. 30,000? Like, if that number had come out last month and it was 157, that day would have gone completely differently. Well, I can't, look, I know that there's only like 12 of you watching, but I'm a public person. I gotta be, there's a higher standard for if I'm gonna say something. You know how it is. You understand, right? I've got to have like a real reason to say something if I'm gonna come out and say something. But this is just fucking ridiculous, man. Pardon my language. I need to stop swearing. You can tell when like the passion really comes out, the swear words start coming out, right? Because that I'm sitting here being like, well, I can't say that because I don't really have the proof to say it, but under the surface, that I'm kind of like, well, there's something fishy about these numbers. But now it's just straight up, this number is BS. This number is BS, and like, Congress should be investigating this. Like, seriously, it is crazy. I'm gonna bring the microphone down here a little bit. I don't know why I keep feeling like I want to adjust it, but I want to adjust it. Yes, we have manufacturing PMI. If the PMI comes in lower, plus less jobs on non-farms payroll, does that mean inflation is cooling? If that's bad for equities and good for the dollar? So, no. It's actually you're so close. You're so close. So if the PMI is weak again, that could be good for equities, because if we're not going to have higher rates, or if the Federal Reserve has to reduce rates, then that means, more free money, and the stock market loves that. Okay. But it will also mean a weaker dollar. And you can see here off of these numbers that the dollar got weaker. If we had a weak PMI, you would see the dollar go even further. Because that means lower interest rates, less money coming over into the dollar. Okay. Back to zero hedge. Okay, so they revised it lower to 157, which means that every single monthly payroll sprint in from 2020 to 2023 has been revised lower. A 12 sigma probability, and virtually impossible unless there was political pressure to massage the data higher initially and then revise it lower when nobody is looking. But wait, there's more. Well, July was revised down by 30K from 187 to 157. June was revised even more by 80,000 from 185,000 to 105,000, which means that a number that was originally reported as 209K has been revised 50% lower to 105K, and a collapse versus original expectations of 230. Here, the BLS was proud to report that with these revisions, employment in June and July combined is 110,000 lower than previously reported. That is insane. 100,000, like that's a whole report. That's like almost a whole jobs report. Keep in mind, like 160 is like what is necessary to keep up with population growth. Okay, so like anything lower than 160 is kind of like the economy is slowing. This is really, this is serious stuff. Like in all seriousness, you cannot be putting out a jobs report here that's off by a whole report that's off by 110,000 jobs. That is just completely unacceptable. Like, people are making decisions, and people are making important decisions about not just their business, but about our currency and our central bank policy. And they're feeding us information that is just completely inaccurate. And to be honest, it doesn't matter if it's intentional or not. You cannot be allowing a report that's that far off. Like, heads need to be rolling at the Bureau of Labor Statistics right now, man. Like, I highly doubt that anybody is going to come in here and admit to, like, oh yeah, we were totally cooking the numbers. But, like, somebody should be getting fired. Like, it's just unacceptable that your number would be that far off. Yeah, you're right. This is arresting political opponents. Are they going to televise the trial? I hadn't heard about that. But fudging economic numbers really is like a huge crime to me. Like, you were all acting like this is like a nothing burger, politicians do it. No, this is like one of the worst crimes in my opinion. It's to be going in and giving people bad information. Literally lying about the economy for political purposes. Impeachable, frankly. If there was any evidence that the Biden administration had spoken to the Bureau of Labor Statistics and was putting pressure on them to have better numbers. Impeachable offense, in my opinion. Wow, that's a cool looking thing that you got there, D. I don't know if it would actually be useful, but that's pretty cool. It looks like it's a heat map that shows you the actual numbers. It's cool. I don't know if you can really gain anything from it, though. It all sources back to trying to diminish the chances of Trump being reelected. Well, I'm surprised that the treasuries give this back. In fact, the 30-year is actually towards the lower end of this range. So, okay, I'm being super ADHD here. Yeah, that was the image that D said. I sent you a pic of a Dom via Discord. So that was the picture that he sent me. So I don't know what it is. He'd have to explain what it is, but it looks like some indicator that you can get for NinjaTrader that shows you the market depth, but it actually displays numbers for each price. You can only have a bad economy for so long. Well, here was the problem, though, with that is that the economy might be, falling into recession a little bit too early. Because you can have, I don't know, if we had a recession, let's say that like October is when like the big stock market crash, whatever happens, and it was October, that might not be a key thing on people's minds anymore a year from now. Yeah, it's hard for me to know for sure, but I have so many thoughts on this big YouTube chat. I know, I'm sorry, Michael. There is Discord. I have the main channel of our Discord up right now. Answering somebody's question in there. Okay. I'm being ADHD. Let's finish reading the story on the unemployment report, okay? Turning to the unemployment rate. Things here get really ugly. Instead of the 3.5% expected print in August, the unemployment rate jumped to 3.8%, up sharply from 3.5% in July, and the result of 514 newly unemployed workers as the total civilian labor force increased by 736,000 individuals. The jump in the unemployment rate means that the economy was only able to absorb a nut 77K of them in August. At the same time, this surge in new workers also suppressed wage growth. 514K new unemployed workers as the total civilian labor force increased by 736K. Wow. Okay. So it's saying that all these people that were laid off, largely from like Yellow, whatever it is, that shipping company, right? That those guys are not finding new work. Okay. The silver lining was that the participant rate participation rate actually rose from 62.6 to 62.8 and gradually catching up to where it was before the pandemic. Next, turning to wage growth, August payrolls rose 2% month over month and down from 4 last month and missing expectations of 3. On an annual basis, the 4.3% print came in as expected and modestly down from 4.4% last month. I'm not going to go into all of these details because I kind of feel like when I read that your eyes are probably glazing over, but here we go. Of note, as the Wall Street Journal Fed whisperer Nick Timiraos reminds us, July had 2 more weekend days than June, which tends to bias upward the monthly wage print. August went the other way. It doesn't affect the year-over-year number, but it likely overstates July month-over-month wage gains and August wage softness. In other words, wage growth was even slower. Ooh. Developing, they're still writing the story, I guess. I am so worked up over this, man. And I'm sure it sounds like you guys are too. This report is just it is, heads should be rolling, man. Heads should be rolling. We passed the anger part a while ago. Now we're at acceptance. No, I never. When I get angry about something, I never get over it, man. This is my problem. Yeah. Not you, me. Oh, I gotcha. You're at acceptance. I gotcha. No, like, again, I got that thing. It's like the medulla is like that emotional memory. And for me, when things happen, it's very, very easy for that emotion to get burned in there. And then it's just always there. And anytime that situation comes up, the medulla immediately sends the whole brain into, fight or flight mode, I guess you could say. Yeah, I don't believe the government. Well, I mean, the government doesn't believe the government's data, right? Because they revised it down. But so they said that the number was 187. What is the real actual number? What are they going to revise this one down to? Because if they're revising the last one down by almost 50%, that means that this number could have actually been 105. How different do you think that the market would be behaving here if they had said 105? Because at 105, now you really are like, hey, maybe this recession is possible. Well, I gotta find somewhere to talk about this. Let's see if Reddit has anything. We might trade off of the PMI. Although I have to say that because we could have tried taking a trade 10 minutes afterwards. I decided not to because this was just so crazy. Looking at the way that this has kind of gone since the news suggests to me that I don't have enough to really have a good handle on where it's going to go and make a trade. But that could change with PMI. So let's kind of just let this do its thing. And maybe when PMI comes out, we might have something to work with. that will gamble and say a south trade on PMI. I don't know, D. Because, sorry, I haven't seen him. I really hate it when this happens because Mr. Bond took a gamble on it. And I haven't heard much from him since then, which, you know, I hope that doesn't mean that he's like, you know, really, really down about that trade. But he was right. In other words, he was long the treasury and from a good spot too. But because you got the whipsaw, he got stopped out by the whipsaw. Yeah. Amazing how the book is in today's and it just shows how these algos work. They likely have the software that if it hits them, say 5 or 10 of the rest of the lot cancels. Well, they are awfully fast. I mean, the liquidity is not all that great. It's back to 2,000 again. I would have preferred to see 3,000. I guess on a non-farms day that might be, but you know, on Monday when we come back, I would like to see 3,000s. The low of the day is only 4 ticks. Well, yeah, you're right. He probably got his price on the stop, but it's still a loss. And I don't know what his price he had actually got, how much of a loss that actually is. And or if it was multiple contracts, but yeah. This is why trying to hold a trade through non-farms payroll is really difficult to do, because non-farms often has whips both ways. So you get stopped out even if you're right. Most news events, you know, if you're right, it just goes your way and it's no problem. But non-farms, you got to be careful. Unless you really, really have, like you've been taking a swing trade and you really have a lot of profit baked into it. But I don't think I've ever had a success with that in non-farms. Yeah, some other pieces of news I might be willing to hold it if I think I know what the release is going to be. If I think if I have a prediction for what the number is going to be, but never non-farms. I think I've been destroyed by it. Like I remember going back through and looking at some of my earlier trading and realizing that if I had just taken out the losses that I had gotten on Fridays, which probably a large portion of that was non-farms, that I was actually profitable through that period. So like, that's when I kind of turned into, I just don't touch it until it's been like at least 10 minutes, if not 30 minutes. And then even then, I'm like super cautious. Like I really have to have a really strong reason to think that I have an edge on what this number means and what the flows are going to be. That, or it's a number that's just so insane that it's going to run all day, right? It's really easy to understand this cycle. The Fed hiked rates too fast and too far. Well, you might be right. Kind of seems to me like the data that we're getting right now, though, is not accurate enough for us to really be able to tell yet. Kind of does look to me like that the economy, that they hiked too far. I don't think that I have enough data to like really conclusively say publicly that I think we're going into a recession. But I personally am starting to lean towards that we will see it. That the soft landing is not happening. I have kind of been like that for a while because I could see the difference between June and now. It was just like all of the sudden, well, and this has been particularly jarring for me, understand, because I got I changed jobs and I got a pay increase. So I've been, investing a lot, and it's been a lot to handle. Like, I've been doing so many spreadsheets and stuff to try and keep track of everything, because it was just like everything got more complicated from there. So, well, my finances are getting more complicated because I have more discretionary income. Everybody else in the economy just almost immediately, it was like complete night and day difference between like July and August. It's just consumers just stopped buying stuff all of a sudden. Just like a complete flip around in behavior. The place where I see it the most extreme is on the online, like the used items, your classifieds markets. So I keep pretty good tabs on my local classified market. And it used to be that if somebody would post something that I was regularly searching for, that I probably needed to message them that day or it would be gone. And now those items are there all month until they get relisted. If they get relisted. If I want to get rid of a couch, I basically have to give it away for free. Like, people are just not buying stuff. So I started to see that early, and then I started to see it in the soft data, and it's kind of been like, well, how come all these other numbers haven't really been paying through? And now we're starting to see it in the unemployment data. And it turns out that it was there all along, and that what I was seeing in just from looking around at the people around me was true, and that the numbers were completely inaccurate about what the current situation was. Watch out when student loans start to pay back those payments. Yeah. It's going to be very interesting, though, to see how much money actually ends up going into those payments, because it seems like there's a lot of people that they're just not going to pay it. Like, there's like, what is it? It's like $1 trillion worth or whatever. It's not like all of that, or it's like 1% a year, I think. I don't remember what the estimates were, but I don't think it's going to completely come back. I think that there's going to be some people at the higher end, because Biden has all of these other things for these people that like have like ridiculous amounts that like they just don't pay it, and then after 10 years or something, it's forgiven. So it's unclear how big of an impact that actually will have on the economy, but I suspect that it will, that even if it was a small amount of those payments came back in, that it would have a strong impact, because you have to think of it as like stimulus, essentially. It's basically, it's stimulus. It's money going into the economy that's supposed to be coming back out by being paid back and is not being paid back. So that money then turns into discretionary income. Okay, wait, apparently we have a number coming out here with the S&P 500 open. Oh, it's the Canadian S&P Manufacturing PMI. That will be worth looking at. And of course, the NYSE open. Likely, no, I don't think that you're going to get the last hike. I don't think that they're going to hike in September. Not now. I think that the probability before this was 11%, and it's probably going to go down to like 5%. Announcers are just like saying it will have an impact on the market, but will not have too much of an impact on people. It's going to be vary on people's individual circumstances, right? Oh, it will definitely be the USA PMI. They'll probably just yawn at the Canadian one. Still waiting for the number, though. Okay, so they've updated their story. Let me read a little bit more here. Of note here, the Hollywood strikes removed 17,000 from August payrolls, with the information category employment in motion picture and sound recording industries was down. The BLS also highlighted the employment in truck transportation fell sharply, negative 37, largely reflecting a business closure referring to the yellow bankruptcy, the first of many. The data is even uglier if one looks at the composition, because in August, the number of full-time workers tumbled by 85,000. Add that to the 585,000 full-time jobs lost in July, and you get a whooping 670,000 full-time jobs lost. However, this has been offset by 1 million part-time job gains. Whoa. Bottom line, as we said in our preview, the wheels are indeed coming off the labor market, but the BLS is doing its best to make the hit as comfortable as possible. Meanwhile, Bloomberg's Edna Karan writes, on a net basis, these figures probably don't change the Fed debate. They broadly show a labor market that's cooling at a very controlled pace, in line with slowing inflation. That's a good outcome, but it's unlikely the Fed will declare mission accomplished. Below, we share some more hot takes on today's print. Bill Jaffery, an economist at CIBC Capital Markets, has this take. Overall, today's report underscores that rebalancing in the labor market is picking up some pace, and softening in labor demand could translate into even weaker income and spending ahead. I don't know if I really want to read all of these. Peter Chichir, I think today's number is perfect for that, and think we could squeeze nicely into a new month. If anything, the data is almost weak enough to spur recession fears, but I don't think there is enough in here for that. And the reality is the Fed must be jumping up and down with joy about the unemployment rate. Not just that it moved higher, but that it moved higher for all the right reasons. So there you go. So it looks like that the major analysts are kind of coming to the same conclusion I am, right? Fed's not going to declare mission accomplished, but they're not going to raise rates in September. There are a number of announcements in the USA, and people are getting used to it and will not change the investment plan of a trader. I want to argue against you, but I'm not sure I understand what you're saying. You're buying call VIX spreads in January and March? That doesn't sound like a bad trade, Gary. I guess it depends on how much you're paying for them. Sounds like a trade that I'm going to go and look at, and I'm going to decide is too expensive for me. Because I don't know if the timing is necessarily right, though, because kind of what I'm seeing suggests that volatility will remain somewhat subdued until the expiration. But after that, risks expand considerably. Yeah. I think that, as I've been saying pretty much all year now, actually, I don't know how long it's been, but I've been saying that we're probably going to see some weakness in the fall when we have the historical weakness period, September, October. I think we're going to see it. And the question is just, how bad is it going to be? When we get through to the end of that, do we say, yep, here comes the recession? Or are we in the recession at that point in October? I guess we'll see. I guess we'll see. Okay, so We still got 30 minutes till the news at the top of the hour. I just want to continue ranting about how these numbers are nonsense. Well, let's see here. What was Jim Iorio saying? Saying that we are having economic difficulty due to the pandemic presupposes that the mitigation strategy was an appropriate response. It wasn't at all. We are having an economic difficulty due to incompetent leaders. Yes, probably to some extent. Yes. Mohammed A. L. Arian, taken at face value, the U.S. August jobs report increases the probability that the highly data-dependent Fed will not hike again this cycle as job gains, including the revisions, moderated, and the unemployment rate went up to 3.8%. Labor force participation edged higher and wage growth was moderate. Markets will like this. It's mixed for the economy. Finally, why face value? It's hard to know with confidence how best to adjust some of the numbers for strikes, etc. So that's interesting. So that's one thing. I don't know a whole lot about what leads to revisions and everything, but they're saying that, Hollywood being on strike and so forth, for instance, is one thing that might result in revisions. Jason Furman, this is consistent with continued moderation in inflation, but not remotely cause for panic about the economic trajectory. Still a lot of jobs being added and high unemployment. No need for the Fed to move in September, and I would be shocked if they saw it differently. Yeah, same here. Finally, he's got a bunch of things here. Jobs report largely consistent with a continued moderation of the economy. Oh, with some wrinkles. Yep, I agree with them. Those are the same. Like I personally, I'm kind of turning, and this may just be like our own tendency to want to be negative and how upset I am about the revisions, but I'm kind of starting to lean towards the recession case, but I do not believe that the data that we have really strongly supports that yet. Nick Timmerell's posted a couple of things that we had already pointed out here. That was about 30 minutes ago. Treasuries are turning down now. The way that the 30-year is dropping here is a little bit jarring. All while I was reading that, but it really turned down hard. Why is that? Yes, the S&P 500. Well, oh no, that's interesting. Okay, so this move that we're seeing in the treasuries basically started when equities opened. So, for whatever reason, from the equities open, they have decided to sell treasuries and to sell stocks, frankly. So, I have no clue why. I need to adjust my microphone. I keep adjusting it more and more, but it should be like that. That way it doesn't cast as much of a shadow on my face. Is that better? Oh, Fed semester is speaking? I missed that one. Is that on my chart? Oh, yes, it is. Here in 5 minutes. As well as the S&P manufacturing PMI, but still the big number is at the top of the hour, US ISM. They are getting hammered here. This is... Well, I can only just sit and watch with awe, because I'm not sure I understand what's going on here at all. It looks like it's a good 15,000 contracts, if not 20,000 contracts worth of selling, too. So there's definitely like a real big shift coming on here. It may just be the dollar. The dollar is coming back hard. Let's zoom the dollar out here. You can see the dollar recovering. Does look currency driven. Looking around, just seeing if there's any other kind of... I think it's, you know, not as much commentary on Twitter and so forth as I would have expected, but... Okay, so with Messer, we're going to get text. So let's just give it 30 seconds. She is speaking hawkishly. They are selling. So this little turn back to lows is definitely because of Mester's comments. So the thing that I just heard that is standing out to me is that she said 3.8% is an improvement, but is still very, very low for unemployment. So she's talking like that. That's still not enough. She's like sitting there like, are you not recessioned enough? You know, instead of are you not entertained? 23. This is quite the drop that come through here. I don't know, but this drop before all of this, it's a little fishy, don't you think? I mean, if the Biden administration really is trying to game all of the numbers to make the economy look better than possible and kind of like soften the blow or something like that, doesn't seem to be helping them today, because we now have interest rates higher and the S&P 500's just been selling since the open. Must be the Russians. I don't know. When I see moves like that, like my mind immediately goes to conspiracy theories. Who leaked? Who leaked? You know what, though? It was only a small little drop there from, well, 07.5. That's a decent sized move off of her comments, I guess. Yeah, that's true. We have not taken out the low. Well, there was like the low spike, but then there's like the overnight low. So the move in the S&P 500 hasn't been too crazy yet. And the treasuries being back to 4.15 is not the end of the world either. If we were to just come over here and look at your chart, right? That's just test the other side of the range, if not testing the news that we got 2 days ago, the ADP. Was that one the ADP? But the movement does seem to be a little bit more dominated by currency movement. That you can see here when the dollars started turning around, that's when the treasuries really started puking lower. So I think that this is being driven by currencies. And we got 10 minutes until the PMIs. What do you think the PMIs are going to be? So what if, let's see here. Let's try and game this out. US ISM manufacturing PMI, previous reading 46.4. Current estimate 47. So what if the actual came out and disappointed bigly? Like, let's say that US ISM manufacturing PMI came out at 45. What if it came out at 45? Do you think that treasuries would buy on that? I wouldn't, we're in a situation where it would not be out of the question for them to trade back across the entire range. And I don't even think that 45 would be like a crazy reading. I think that's well within the realm of possibility. On the other hand, it could be like 48, 49. And then that would maybe explain the drop that we've had. This is still going. Just take note that the last place that I kind of saw it stop and I thought about it was 415. So let's see how much further than 415 they get. I kind of get wary about that one because that's kind of the point where I'm like, yeah, I get in and then they only go like 5 ticks in reverse on me. So we're a little weary of that one. Man, the dollar is coming back in a big way here, though, man. Yeah, and in fact, they stop right there. So. I kind of hate this. I feel like I'm the only person that's mad about it. I know that you guys are all there with me, but like, I'm just not seeing a whole lot on Twitter and so forth about it. I feel like this is just unacceptable. Well, it's a decent amount that's traded there at 23, isn't there? 24,000? You know what? We should I haven't taken a commercial break today. We should take a commercial break just before the news. Treasuries are still at risk because the banks are not at good conditions right now. Yeah, I'm not entirely sure. It still looks to me like currencies stuff, but this fall is pretty wild. A move like that is definitely going to keep me out if I don't feel like I understand why it's happening. Because there's no way for me to know if they have a reason to continue or if it's going to reverse or what. Oh no, Tatiana Kasharina banned for 8 years from weightlifting. That's the end of her career. Oh, and that her first failed drug test came when she was a child, really? That is crazy. Is this who I think it is? Oh, no, I don't know this girl. She does kind of look like she's on steroids. Yeah. It's got the algos and AI news all confused. I just saw this in an article on Yahoo. August payrolls report showed a surprise jump in U.S. unemployment as the economy added more jobs than expected. See, the amount that we've fallen here, like let's say from 02 to 23, like that's what I would have expected the market to do if we were just going off of the headline number. If we were just looking at the headline, that the headline was 17,000 jobs above the consensus expectation, and that was the only thing that mattered, I would have expected us to have traded down about this much. And it would have been like, maybe they do have to think about raising rates in September. Now, I think that the market did make the conclusion that the change to the household survey and the unemployment rate going up and everything, and the revisions really suggests that things are slowing down and that the Fed is accomplishing what they want to, and that they probably don't need to hike again this cycle. But we are turning down, and we're not entirely sure why. Could just be currency movements. And Anmal here saying the treasuries are still at risk because the banks are not at good conditions right now is absolutely a good observation. Although, if things are slowing down and, if things slow down too quickly, the Fed may actually have to reduce rates. That would certainly help them, right? So... not sure if that's necessarily what's driving them at this very moment, though. So I got this new water bottle, and I really like it, but it's not big enough. It needs to be bigger. It needs to be like twice as big. Okay, here we go. Here's the data. Here comes the data. Do. Oh, shoot. Oh, hey. Okay, so expectation was 47, and we got 47.6. Prices paid, though, was 48.4 versus the expectation of 44, and that's probably why they're selling so hard. This is, once again, the Xth news release in a row where the Treasury market makes a very bizarre move ahead of the data that we just cannot explain. And then when the data comes out, it looks like they were front running the data. What's with that? Futures gone bust. S&P has got hammered pretty hard on that one too. 10 points so far. You know, if the Biden administration was like fudging numbers, why not also leak data too? No, it would have to be, that wouldn't make any sense because ISM is not released by the beer. It's a private company that releases that one. So that can't explain it. The dollar spiked hard on that though. Like we've gone from a low of 103.2 in the dollar index to now 103.71. So 50-cent increase. Doesn't look like they're done yet either. And man, I guess if we had taken the gamble, we would be up right now. Be up like $15 if we'd taken a gamble. Well, it's anybody's, man. I don't think I'm gonna touch it, to be honest with you. Well, I mean, there's definitely going to be opportunity out there for us, and it does look like you might be able to make a little bit here and there from the flows, but this is just all a little bit too wild for me, man. S&P reversing the dump, yes. I should note that the changes that we're getting here are still not to extreme levels yet. I mean, we still got an hour left, so let's see what happens in the next hour. We could see some major changes in the next hour too. Although those major changes may just be like reversing everything and ending up where we started. ZT hit the non-farms payroll low and flipped. I definitely saw the flows of the treasuries reverse there. It kind of looks like they're just retracing that move off of non-farms. Or sorry, PMI. I feel like these numbers are crazy enough without the ISM. It's beyond my ability to predict the flows at this point because this is just such a wild situation, right? I keep seeing people on Twitter promote this Tradello thing. What is this? How much are they asking you to join a Discord? Pricing. $110 a month. Look in the video description, guys. We have Discord link there where we have a community. Things kind of get quiet in the summer. It's ramping back up if you want to be part of the community, because honestly, it's not normal. It's just contrary to human nature to trade and then not be telling anybody about it, you know, like that. Because really, if you're going to day trade and have any chance of success in it, you have to be pretty dedicated. And it is just not healthy to be that into a thing and not have people to interact with and commiserate with, you know. And there are people charging you $110 a month for that privilege. Check out the Discord, it's free. Oh, you tried it? Yeah, anyways, you think it's overpriced? Maybe I'm just incensed that somebody is trying to pay with a competing product for something that I offer for free. Oh, you know what? I did miss your message, Ostrats. I don't know why. I think it's because your user picture is dark, so it doesn't like catch my eye. Do you know where I could find out if TradeStation Web gives you free order flow indicators on and the DOM? Oh, jeez. I have absolutely no clue, man. I know almost nothing about TradeStation. Which is crazy considering that it's supposed to be like one of the biggest players in the space, but nah, I don't know anything about them. Let me tell you a story. Oh. So story about how... Oh, I sent AMP funds via Revolut. Is that a bank in France? So I don't have the chart of this open, but I'm just hearing from my news squawk. They're pointing out that the VIX has gone down through this. That trade that Gary gave us earlier in the day sure sounded a little nice now. Go back and look at it. Oh no. I'm gonna let the Ostrats finish the story before I read it, because I think I know where this is going. That sounds terrible. Because it's a pay system. Jeez. Did they send the money back and then it doesn't come back to you? Okay, I sent AMP funds via Revolut. A day after that, they told me that they don't support it. It's a pay system, and they told me they have sent the funds back and they'll be there in a day. For an entire week, I've fought with the representatives because they outright refused to give me the proof of transfer. Their support reps. Oh, so wow. So you sent them money, and then they said we don't accept that. We send it back, and then you didn't give it back. And then you said, are you sure that you sent it? Can you give me proof? And then they're not giving you the proof? That's a little sketchy. Oh, you finally got it. That probably sounds to me more like incompetence, though. That would be about on par for them. Dude, you should go post that on the Futures.io thread about them. I would. I think, that's the sort of thing that should be, I don't think it'd be like the only thing that you would factor into, which company you decide to go with and everything. But I think that that's relevant information that other people that might be thinking about using that broker would want to know. Don't be like vindicative about it or anything. Just post the facts, Okay, what do you mean by, is there any way to do time stamping on the chat? Oh, on the chat. I thought you were saying chart. I think there is. Yeah, so if you, I don't know if you have this, but if you look at the top of the chat and you look in the upper right, there's the little 3 dots. And if you click on that, there is a toggle timestamps option. Another thing is you might want to change it from top chat to live chat. All messages are visible. Not that we ever see messages get throttled anyways. But oh, the guy that shorted ZN, that was before the news. So he was basically well, he said from 7 o'clock, but I think that he meant Central Time. So that means that he got into it 30 minutes before the non-farms payroll, had a good profit baked into it. Thought that he could hold it through the news and then got stopped out on the swing. Even though it did ultimately run his way and he would have made a ton of money on it. So very small loss, I guess. Assuming which price he got it at, but still. I'd be so pissed. Yeah, is that what I said? It was that you were long. Did I say you sold it? No, you bought it. But how many ticks did you lose? Was the thing that we were kind of wondering. It was a blessing in disguise. Okay. You know what? Like if it was me, and let's just say that I had caught it, right? I would have been like, oh my gosh, this is so crazy. And I would have just held it and watched it come all the way back and lost it on this retracement and push lower. That's totally what I would have done. Oh, it was 3 contracts? Man, my man. Oh, okay, it's on 300. I guess that's not the end of the world. I thought it was going to be like a few thousand. Not a few thousand, but I was like, that could easily be $1,000 loss there. You know? If I was holding, it would be dead. Well, but it did go up, though. Like, they went down just to stop you out, and then they went up. Totally not fair. Good question. Why did the dollar react positively and the S&P reacted negatively to the ISM manufacturing news? So, I think that the reason why... So, number one... Well, let's just read the numbers first, okay? The expectation was 47 and they got 47.6. So only slightly above the forecast. But prices paid was 48.4 versus 44. Okay. So when that happened, the S&P 500 sold and the treasury sold. And the dollar jumped, which is about the correlations that you would typically see. So why would that be? Well, if you just look over if we just think about the treasuries, okay, why would the treasuries sell on that? Prices paid suggests that inflation is sticky. We're getting a lot of stagflationary data here. And so if inflation is sticky, that means the Federal Reserve has to keep interest rates high for a long time. So that kind of raises the expectations for interest rates. So higher interest rates means more money comes to the United States, and that's why the dollar goes up. So they're expecting people to transfer their money to the United States so that they can buy treasuries for the higher yield, essentially. And that's why I think that you tend to see that correlation in the dollar a lot between the dollar and the treasuries. Now, that said, the equity market sold, which is also what we would expect, but they very quickly reversed and are recovering that loss now. I think that the equity market is still on the unemployment data is looking weak, and that's actually really good for our soft landing case. And probably they're still in that area, although I'm starting to become concerned about the recession scenario. Yeah. So I'm so curious, Bond, why would you say if I was holding, I would be dead? Is that because you would have tried to hold it and you would have taken the stop when it came back down here this later? Yeah, I got confused why there was a jump due to unemployment data, but someone explained it to me. I would, like in this situation, it's if you want a heuristic, then you just first you say, okay, what are the treasuries supposed to do? And then you will see the dollar do the opposite. Inverse correlation with the dollar. Positive correlation with the Japanese yen. That's usually what tends to happen. But it's not always that. Got stopped at 29. Well, yeah, I mean, if you had not had that stop, you could have gotten, you know, how far would you have let it gone before you would have puked? Right? Wait, you say it went another 10 points? Well, off of the initial news, the lowest that I saw was 27. But perhaps you're saying if you had held it this whole time, it went down another 10 points beyond that? Yeah, that's great. Yep, exactly. You know, this reminds me of another non-farms payroll that we had. I don't think it was last month's, but maybe the month before that. Do you remember that? Where it was like we got this freak, you know, we were like, oh, this is definitely good for treasuries. And then later on it sold off and we got like this crazy selling flow going into it that we're kind of like, well, what's with this? But then eventually it did come back up. It's almost like an exact mirror of that today. Well, not a mirror. It's the exact same thing. 10% intraday margin rates. I think that just means that you get 10 to 1 leverage. I don't know. The way that a normal person wants to think about margin is, I have $1,000. How much leverage are you actually giving me? So if it's 10%, then that means I can times it by 10. And if I have $1,000, then I'm actually trading $10,000. Right? And then they would calculate their profit and loss based off of that. It doesn't really match the way that especially when you're trading futures, that you really tend to look at it in practical terms, right? Because the way that we look at it in practical terms is, okay, here's how far I think it's going to go. Here's how far, you know, before I would like panic and give up or whatever. How big of a loss would that actually be? You know? So it's number of ticks times tick size. And you would do all of our math off of that. So in the series 3, they've got, you know, all of these questions about these sorts of things. Where given the tick size and so forth, what is the win or loss and whatnot. And it's just, I think they're just kind of silly. Because they're really trying to just kind of like, you get all of those different things scrambled around in your heads and you make mistakes. But so if I have 2K, I won't be able to trade MES? That doesn't sound right. So for most brokers, MES is like $500 a contract, I think. No, it's like $50 a contract. Like the intraday margin on those is like insane. I don't know if they've changed it. They probably have changed it. I would hope that it's more like $75 or $100 now, because $50 is like way too much leverage, but whatever. Okay, do you think that all of the order flow indicators like cumulative delta are needed? The DOM is available, but not of the other ones. Okay, so yeah, are you the one that was talking in Discord about, you know, the difference between like TradeStation and like NinjaTrader and so forth? Oh, TradeStation doesn't have them. Maybe it's somebody else. Okay, so I would say that I would find it very difficult to trade without cumulative delta. Yeah, cumulative delta in particular is one that I watch. That I think that at this point I'm probably rely on cumulative delta as much as I do the DOM itself, because when you're watching the DOM and you're seeing the numbers go through, it's just too difficult for you to keep track of how much buying and selling there actually is. And that imbalance between market buys and market sells is like a really key indication, especially if there's informed trading or if there's a meta order out there. So I absolutely will come over here and look at these. Cumulative delta is also the only reliable way, in my opinion, to measure the strength of a move. Because, you know, you might see a move that one day it moves 16 ticks and then another day it moves 8 ticks and you're like, well, this one should have moved more than this one. What's with that? And well, it's the difference in liquidity. That's going to change all of the time. But cumulative delta is kind of like normalized by liquidity, right? So I can look at this and it can say, okay, from the peak here it was 155 to 135. That's a 20,000 K drop in cumulative delta. That's a pretty major change, but it's not like a super crazy one. That's on a non-farms payroll day, you might see a lot more than that. So when we're looking at this action, I'm not necessarily being like, okay, like they're reinterpreting the numbers or there's another piece of information that we don't have or something like that for 20,000 contracts. It might just be like end of the week positioning sort of stuff. So that's why cumulative delta is really important, right? The DOM is really important. And I don't really like NinjaTrader's DOM. I don't feel like that NinjaTrader's DOM is adequate. So, but a lot of the other order flow indicators that people sell, like these Vista charts and all that, don't really need. So I don't want to pay for NinjaTrader. AMP Futures sucks, and TradeStation does not give cumulative delta. Okay, so if you don't want to have a large upfront cost, then probably the best choice for you would be Sierra charts. Sierra charts, you don't pay a whole lot upfront. You do have a monthly fee and everything, but you get everything that you need in the tools. You don't have to pay up front. And you can use different brokers, although I think no, you at this point you end up using the Sierra chart stuff, but I digress. Yep. Well, it's a little bit, so the way that Sierra charts puts their pricing up is a little bit deceptive, because there's also like the data and everything else like that. But yes, in the end, you're paying like $45 a month just for the platform, and then you're paying for your data fees on top of that. Well, yes. Do you want me to show you what I'm talking about specifically? Yeah. I mean, I can show you later, but to keep things simple, yeah, you're paying $45 a month for Sierra charts, right? Now, if you compare that to my preferred platform, Jigsaw Day Trader, which does have charts, even though I'm not using them, and they are adequate for what you would need, you're paying $50 a month for a live trade license, but you have to pay $500 up front. Right, so that's the difference between Jigsaw and Sierra charts, is that Jigsaw has an upfront cost. Okay, so if you come here, you search for Sierra Charts pricing, they have this description of service and pricing. And then you have to start coming down here, and it's like, okay, you want the integrated integrated packages. Integrated Sierra Chart with advanced features service package 11, price $46 a month. There's also the one with MBO, just 56. You don't need that one. But you got to keep going because then you also want the data, right? So you want service package 11. Oh, there's a multiple purchase discount. That's cool. Oh, they kind of changed it. So then I think you have to come over here. Is it this page? They've changed it. They changed it. Somewhere in here it tells you, you know, what you're paying for. I guess they kind of simplified it, which is cool because I kind of didn't like the way that they did it before. Now you kind of see the real cost, that it is basically the same monthly fee as everything else. But I think that the data is like plus 33. Yeah, there you go. NinjaTrader is 59 plus 33 for data. Sierra is 46 plus 33 for data. Well, unless you pay for NinjaTrader, yeah. And unless you pay the $1,000 to $2,000 up front for NinjaTrader, yes. Take your pick. You know what, though, to be honest, so most people, for some reason, you know, want to have that low monthly cost. If you're really serious about futures trading and you're absolutely positive that you're going to trade for several years, it really is better to just buy the full package. If you're really dedicated to this, you're not going to regret buying full package, which is to say, you know, if you're really dedicated to using NinjaTrader for the next 5 years and you pay the $2,000 up front to buy it, you're not going to regret that. Now, if $2,000 is too much of the money that you would have to trade, you know, you're kind of on the edge of, you know, is trading really for you? Or at least if you're going to be trading, then you kind of have to think of it more of practice so that when you have more income later, maybe you can trade more seriously. Well, so one of the big benefits that you get with the license from NinjaTrader is, number one, you don't have to pay the monthly fee, your commissions are lower, and you get to use all of the order flow indicators and all of that stuff that you have. He has the full version, doesn't he? Sierra Master Race. Kinda all depends on what you want to do. See, so from my perspective, if it's like you're dedicated, you're going to go into this and you're really going to give it a good run for, like, let's say 5 years, I really still think that the best deal is to pay the $500 up front for Jigsaw and then $50 a month for it after that. It is more expensive, I understand, but it's a really good package. Actually, let me look that up. This person was asking how much it was. They're saying 1.5K. But there was a discount. Let me see. What was the discount last time? I don't know how much it changed, but back when I used NinjaTrader, I had to get extra volume profile plus extra. Yeah. So you don't get that stuff unless you have the full license now, which is kind of where a lot of people run into issues. And you don't necessarily get a memory leak in C# is kind of different from what you would call a memory leak in, say, C++. It's not quite the same thing. So let me explain to you why that matters in this particular instance. So a memory leak is that memory gets allocated to something, and then when that object is deleted and the application is no longer using that object, the memory does not get freed up, because you have to go in and there's like this stack. So there's like, the way that it works is there's some variables down here that you can just use, but then if you need more space than that, you start using the stack, and you have to come and say, okay, I'm going to use this. This part goes to here, and this part goes to here, because you don't want this variable to start pointing to this bit of memory. You have to section off that memory and say this memory belongs to this variable, right? So you have to allocate the memory in the stack to that variable, or whatever the deal is, right? So when you delete the variable, you have to free that memory up, and people will not design things correctly and forget to do that, and that's called a memory leak. Okay? Well, that's one of the most complicated parts of programming, is dealing with memory. And most programmers don't do it, because they created all of these languages off of C#, off of C++, so that people didn't have to deal with memory. For instance, a garbage collector. A garbage collector will go in and it will say, okay, since the last time that I checked, are there any variables that have been deleted? And if they have been deleted, then I need to free the memory up. Bang. So you get garbage collection, and then you don't get memory leaks anymore. And that's what C# does, is C# is a garbage collected language. So what happens then when you start to get NinjaTrader uses insane amounts of memory? Because it does happen. Well, what happens is the variable is not getting deleted. Does that make sense? So like, one of the things that I think that maybe they've fixed it, but something I found will pretty reliably get NinjaTrader to use insane amounts of memory is to bring up the backtester and backtest things a ton of times. And it will load a ton of data into memory, and it's still referencing it. It's still using it. And so it's using all of that memory. And so these are the kind of things is that they don't think about, oh, if I'm going to load like this huge amount of data, I don't necessarily want to do it all into memory all at once. I maybe even need to do only the part that I need and add, or, switch them through in a cycle. And they don't do that part. And so that's where kind of the quote unquote memory leaks in NinjaTrader come from. So number one is the big memory leaks in NinjaTrader were in the backtester, and I think that there's may still be some there, either in the backtester or if you're doing something where you're loading a lot of data. But the other place where they will come in to play is when somebody creates some sort of an order flow indicator that requires tick replay, and they have all of these arrays that are saving data at every stop, and then they're loading a huge data, like 90 days worth of data into it, right? You're going to come back and it's going to use like insane amounts of memory. So I guess the point is if you know enough about what you're doing and you know enough about the indicators that you're using, you can avoid that stuff. So I wouldn't put it as a reason necessarily to use one over the other. But really what it comes down to, I think, is these other things, which is like, do you want to have an upfront cost or not? Do you need a DOM? Do you need an all-in-one solution? Because if you would need an all-in-one solution, I don't really feel like that NinjaTrader is it. Because their DOM just is not very good. Their DOM is just not very good. So then you come back to, okay, I want an all-in-one solution. What about Sierra charts versus Jigsaw? I mean, then that's an even more complicated thing, because with Jigsaw, you are paying more because you got an upfront cost, but you have, I think, better tools overall, and you get more innovation from them. Sierra charts is just copying other people, whereas NinjaTrader is making new innovations. So you get the new innovation at Jigsaw first, even though they've been kind of slow lately. I liked ATAS design, but back then they... Well, this is another thing that drives me crazy. So, people will make trading platforms based on Java because Java is cross-platform, and so then they can put it on Mac. But the disadvantage with Java is that the GUI elements that they have are just weird. So you'll get these GUIs that just don't quite look like your normal Windows application. Like when you look at Jigsaw, for instance, is a really great example of this. Looks like a Windows application. The look of the buttons, the look of the grids, and all of that looks really nice, and that's one of the things that keeps Windows on top, is because is the look of it, right? And then you go into these Java platforms, and it's like, what the heck? Especially when it comes to things like managing the workspace and stuff like that, because they're usually relying on somebody else's framework for that stuff. So that's where I really dislike the Java platforms. And that's like ATAS and some of these other ones. Sierra runs, does Sierra charts have a Mac version? No, that's cool. Because yeah, you're not going to have a Mac version for Jigsaw. Because it's C#. The other nice thing about C# is that you get to use the bridge stuff. Where in C# basically you can have two programs share a location in memory, which is super cool. Like the way that this works with Rhythmic Trader Pro is so nice. So nice. It's using crossover. I mean, I could totally see them be using something that would, just compile it in Mac, but I guess not. But you know what? Like, who uses a Mac to trade? I guess we'll probably see more and more of it, because so many people will get the Mac laptop. Because there are equivalents, but it's still the best. It's maybe it's only the best by slightly amount, but their laptops are the best. And so a lot of casual consumers will get the MacBook. And it used to be no big deal because they were Intel PCs and you just run Parallels on them or whatever the deal is, right? But now with the M1 chips, they're not compatible with Windows anymore. So if you have a new Mac laptop, then you are going to have to use the Mac operating system. So probably we'll see more people in the future. But I really do not feel that the Mac operating system is up to the task. So Mark, the way that it works is I connect with Rhythmic Trader Pro, and then Rhythmic Trader Pro takes all of the data that it's getting and it puts it into a location in memory. And then both NinjaTrader and Jigsaw go to that location in memory to get their data. And that's how my setup is working. Depends on what you want the best for gaming. Well, it would be the best for gaming if people made games for Mac. But that's, you know, I love that you said that, because that really exposes the fatal flaw with the Mac and with all Apple devices, to be frank. Apple is not, hey, we have this use case. You need to get the job done. What do we need to do to make a device that will help you get the job done better? That's not Mac. Mac is a fashion company for tech. Mac is a fashion company for tech. And so the reason why they never really do what is necessary to get games going on the Mac is because games are for nerds. That's not cool. Cool people don't play games. We don't want to be the platform that's known for games. That's nerd stuff, and that would make us look bad. I'm dead serious. I'm not. That's like literally how they look at it. And so you got to think about that on the trading side, right? Do you want a computer that's purpose built to do the thing that you're basically dedicating your life to? Like in my view of it, when you decide to pick up trading, you're basically making a decision to dedicate your life to the study of markets, okay? If you don't want to dedicate your life to the study of markets, don't go into trading, okay? Is the Mac gonna be a good tool for that? No, it's not. It's because ultimately the Mac is about trying to look good in front of everybody else. Which, if you're the kind of person that's really influenced by that stuff, trading is not for you. Trading is not about following other people. Trading is about being the one that makes the decision and then looking behind you and seeing everybody scramble to follow in your footsteps. That's how you make money in trading. You don't necessarily want to be the first person, okay? Especially if you're a retail trader. Let one of the big guys take the first step. But you don't want to be the one following the crowd. That never works out for you in trading. Almost never works out for you. Unless it's NVIDIA. That's the one caveat is if it's NVIDIA, then you made money following the crowd. But otherwise, oh, at Tesla? No, I don't, because Tesla has fallen back since then. I don't know if that counts quite the same. I get your point, because there was for a really long time. For a really, really long time. Yeah. But so here's the question on Tesla, really. Because the top in that stock was basically when Elon Musk sold it, right? Am I remembering that correctly? So what if Elon Musk had never sold? What if he hadn't have done the I'm going to sell 10% because everybody's complaining about how rich I am? And what if he never did the buying Twitter? What would would it still be going on? Would Tesla be at all-time highs again? Then you would definitely be right. I don't understand what you can do on Windows trading that you can't do on Linux or Mac. Well, so if there were trading applications that were really based on Linux, not just, using Wine or whatever, maybe that could work. But a lot of it just has to do with how you manage an application. So, like, a big one for me is the start bar. Every window that I have shows itself separately, and I can bring them up, reduce them really quickly. And it's very easy for me to like place them around. Like I have all of these utilities and things like there's an ecosystem, that exists on top of it that allows me to like magnet the windows to the side and things like that. And those, it's a lot of little tiny things that just kind of add up. And on the Mac operating system, trying to have like a ton of different windows open up and like arranged differently, and it just doesn't work very well on the Mac. Like, for instance, the Mac insists that you only have one icon per window down at the bottom. This was also why Windows 11 or whatever the most recent one is they haven't released it yet, I don't think, but you can see it if you're on the preview. But only until recently has that one, I think, been acceptable for trading. Once it happens, it will be well worth the switch because there are a lot of really big improvements at the operating system level that make it worth switching over for. If your computer meets the requirements. A lot of older computers don't. This computer doesn't. I'll have to build a new computer for the new Windows. Yeah, a lot of those things you definitely don't have on the Mac. And then there's other stuff like managing files and oh my gosh, there's man, it's been a really long time, okay? But like after 2008, so like in 2009 or so, I worked a job and they gave me a Mac. And it was one of those Macs where, you run Windows on it and whatnot. And it just was not a very good experience. It was like if I wanted to use the backspace key, I had to install a special piece of software to make that happen and that sort of a thing. It just didn't work very well. Right. And kind of the problem from there is that these things kind of compound on top of each other, right? It's like, okay, Windows has the best operating system set up for business. So then what does that mean? All of the business applications build their application for Windows and not for Mac. And then if they do eventually get a Mac version, it's just not as good as the Windows version because it was built for the workflow in Windows and not for the workflow in Mac. And there's all sorts of workarounds that they have to do and stuff to get it to work okay on the Mac. It's that sort of a thing. Or like, I'll give you another example, okay? Mac doesn't have a right click. On the Chart Trader and Ninja Trader, the way that you enter into trades is you right click on where you want on the chart and then select buy or sell. Yeah. Well, it was not the last time that I used a Mac, but it was the last time that I owned one. Yeah. Or there's like their mouse. Like their top of the line mouse is like really awful. I think that you can press their option key and then click to get the equivalent of a right click. It's just things like that. Like a ninja. Very curious that we come back down to the lows here again. Shall we come around? It's about time for us to get going soon after I've trashed Mac. But the larger point, I think, is the bigger one to take away, because that's kind of the thing to realize about Mac that kind of like all of a sudden you understand why they do what they do. So it's a fashion company for technology. They're not actually about like solving problems and so forth. It's about looking cool to your peers. That's why Gen Z loves Apple things so much. I tell you what, that is the one thing that I would not have expected to be a difference between Gen Z and millennials, but it's becoming very clear to me that is one of the things. Gen Z cares way more about the social status game than the millennials. I think that a lot of millennials have just kind of given up on it. But Gen Z, they care about like that at school you have a Stanley mug so that people think that you're rich because you have a Stanley mug. Like they literally care about such trivial and dumb things like that. And yeah, whether you have an Apple or an Android phone, because only poor people have Android phones, except for that's not true. The Android phones are actually in many cases more expensive and nicer than the Apple, but that's the impression that Apple has been able to build. They've created themselves as a status symbol, even though everybody has one. So how is that a luxury item? I don't get it. But that's their brand. That's their brand. And it colors every decision that they make. Is there any place that provides a free DOM? Well, so I have seen some free DOMs. I would not necessarily, I don't think that I could endorse them. I didn't try them enough, but I haven't seen one that I think would hold a candle to like Jigsaw. But you know, there are some out there that you might be able to get to work. There was somebody made a free one for NinjaTrader, in fact, and they have a repository up. With your current setup, will your Jigsaw DOM order show up in NinjaTrader chart? Or does that only work for the bridge? That only works for the bridge connection. Because you'd have to get the account in NinjaTrader. Yeah, the thing that sucks with that is, so the problem with NinjaTrader, this is the biggest thing against NinjaTrader, okay, is you have to use NinjaTrader brokerage. I did not like NinjaTrader brokerage when I was on it. I know that they're still developing. That might change, but when I was on it, I was not a huge fan of NinjaTrader brokerage. But basically, if you're going to use NinjaTrader, you have to connect to NinjaTrader brokerage. So if that's what you were going to use as your broker, though, then I would use the bridge, right? Because what I'm doing is with Rhythmic data, and it's weird, right? But if you're going to be using NinjaTrader, then what you're going to be doing is you're going to have NinjaTrader brokerage, you're going to be using NinjaTrader software, and you're going to be using CQG Continuum, which is the NinjaTrader data, right? And then you're not even going to be doing the Rhythmic thing, right? The setup that I have is really quite weird, and you would probably not see very many people using it anymore. And eventually, can you stop blinking when you're talking? Probably not. I was blinking a lot there because one of my contacts was rotating. Anyways, eventually, probably I'm going to switch to just using all Jigsaw. But Jigsaw needs to put a feature or two in there for me before I abandon my indicators on NinjaTrader. Like, I need the dollar index. I need my spreads. Can't trade without those. So. But who knows? Maybe this NinjaTrader setup will work forever. And I never have to switch. And I'm really proud of my indicators. There's nothing else out there like that, and it provides really essential tools. So. Okay, anyways, what are we doing? We're refreshing to see if there was anything out here about Vivek Ramaswamy vows to publish Epstein client list. That would be interesting. Pending sense of doom, manufacturing surveys screams stagflation in July. It could be that these guys are saying that the PMIs suggest, you know, problems with inflation, and that the non-farms doesn't really matter. No, I don't trade foreign exchange. I keep tabs on every market. Like if you come over here to the chart, I have a little market analyzer there, and you can see I have all of the major markets on the CME, and I have a couple of the currencies like the Japanese yen, the Canadian dollar, Swissy, I think 6B is on there somewhere. Yeah, there it is. British pound. euro. So I have pretty much everything on my watch list so that I can see if something unusual is going on. Oil's the biggest winner today, by the way, up 2% off of reports that Russia has agreed to oil output cuts. I wish I could watch USD-CNY, but they don't have that on the CME. Especially as of late, because they've been dumping, right? Okay. How do I make a title about this non-farms? What is a word to describe how much we don't believe that these numbers are legit? The most suspicious non-farms yet. That's what I'm gonna call it. All right, guys, I will not be here on Labor Day. You can sleep in. I am going to use that time to record and a video to make. So I'll see you guys next Tuesday. Have a good weekend. Rest well. In the meantime, stay excellent, team.